Let me, on that note, introduce all of our speakers to you. We have with us today a very, very eminent panel. Anil Pinapala, who is the founder CEO of Vivify India. Vivify, for those of you that do not know, is an MBFC that believes everyone needs to finance their dreams, and who cannot want to buy into that. Joining them and steering conversations will be Archana Rai, who is the editor South for the Economic Times. To remind and reiterate all of you, the topic for this discussion is going to be the recipe for success in a VUCA world.
Hi, good morning. I'm Archana from the Economic Times. Welcome, Anil. What has it been like for Vivifin, which already had garnered a loan book in excess of about 100 crore last year itself? So in the last few 8 to 12 weeks, what has the situation meant for your business, Anil? What are you hearing from your customers?
See, I think as Saurabh rightly pointed out, these are unprecedented times that you don't necessarily prepare for and get ready for, but you nevertheless have to react to them, right? And that's what we have been doing in these past 8 to 12 weeks. In many ways, Vivify and our gateway product FlexSalary are built for these times. We are completely remotely onboarding our customers always. We make real-time credit decisions. We provide credit to customers who typically don't get credit from traditional banks and financial institutions. We serve customers with low incomes below 30,000. And to scale that business, it has always been possible only if you do it with technology. You had to build the tools and the platform that is required to onboard those customers and then service those customers remotely. So in some ways, we are in this unique position like Saurabh finds himself, wherein we are built for these times. So be it onboarding the customers, be it servicing their needs, be it accepting their payments, we are able to do all of that without any disruption to our regular business, and almost all of our staff working from home. And we have been able to accomplish it because we are built for this. And we always saw the world evolving into this, but into this kind of a delivery and servicing mechanism for credit. But this particular event has accelerated it and made sure that we are built for it. And as we kind of try to solve these problems moving forward, it will be interesting to see how the established players react. And they are also having a very aha moment, right? Like, as you said, it's a platform moment. Yeah. And they will be obviously plotting their comeback and bridge this gap that right now they see. So, but it's been a great experience. We have been focused on collections, and for us, we are in a unique situation because of the moratorium that RBI has imposed on the NBFCs, which is in many ways the right move, giving relief to our customers. But a lot of our effort has been to educate the customers about the moratorium, how to use it, when to use it, if to use it, because if you have cash flows, you don't want to pile up your payments. So a lot of our focus has been on educating our consumers, existing consumers, on how to use credit responsibility, because credit, especially if it is your first credit, like customers get, is a responsibility, and you need to treat it accordingly.
Very quickly, before I come back to Arvind about reimagining mobility, I thought I could just ask Anil this question about what is the regulatory environment right now for fintech companies, and is there more support from the government for technology-based model?
Especially being in the fintech space, a heavily regulated space, and we being a licensed NBFC on top of it, obviously regulation and compliance are huge elements. And in many ways, a lot of our technical evolution can sometimes be just pulled down a little bit by the various regulations we have. Like Absolutely. When we started out on our journey about a couple of years ago, we all had access to eKYC, which was a great way to onboard customers and leverage the Aadhaar infrastructure. But based on the Supreme Court judgment, that kind of went away. And So we had to quickly reinvent, right? It's a disruptive event if you built your entire business for remote onboarding based on Aadhaar-based eKYC, and that gets taken away. So we almost had to reinvent where there was a break in the process, and we went on and had to do physical pickup of loan documentation to be compliant with KYC norms. But later on, we are always trying to find solutions, and we used a lot of video and image to solve these problems. And we have been always in constant communication with the regulator. And a lot of that yielded result when late last year, early this year, RBI came up with the video KYC guidelines. And in February, we were probably the first company in India to launch video KYC. And in some ways, without that particular regulatory impetus, I mean, it would have been impossible to onboard customers during the pandemic, right?
During the pandemic. So you were prepared in a sense, right?
So yeah, and we would not have, I mean, it's us being prepared, but also the regulator, in our case, RBI, having a little bit of foresight and giving us the enabling guidelines for video KYC, how it should be done, how it should be implemented, and what the regulator will see as a compliant process. Having those guidelines in place has really helped us. And when we launched in February, we were just doing it for just routine scalability issues. But obviously, it played a huge part in this past 8 to 12 weeks. So yeah, I mean, an interesting case wherein probably RBI was more prescient than any one of us.
Anyone else?
Probably bringing that right in time for us to keep keep expanding access to credit.
Absolutely. Anil, I'll just bring you in at this point, because one of the trends that all of us have noticed in the past weeks of this pandemic is that growth capital is available for the larger companies. Early stage capital is available for those so small size investments are available. But the funding crunch, if you might want to call it that, is for the in-between sector, the Series B, for companies that actually require that money but are unable to make that pitch or attract investor interest. Are you facing this, Anil? Is this something that you see will impact more businesses in that stage of growth?
Yeah, it's a very important question, right? Like you are, as you said rightly, there is a lot of early stage capital available. And if you're a unicorn or sunicorn, you probably have investors already invested who will be, even if it's a down round, will be willing to back
Absolutely.
you. But for a company like us, which is not either way, not in either of those places, we need to, I mean, we are definitely going to have challenging times, but luckily for us, in my specific case, we have a very strong set of investors who have already backed us because this is our fourth venture. The previous three, we primarily did it in the US, serving the US subprime lending segment. And we have hedge funds that have backed us in business there that have been invested with us and are continuing to invest with us. In fact, we are going through a bridge round right now that will give us access to capital. And in some ways, we have pushed the next round of funding. But fundamentally, I think alluding to some of the themes that Saurabh brought in, if your business is solving a real problem, which we think we are, which is solving the access to credit in India, bringing credit to customers who traditionally did not have credit with low incomes. And if you're able to do it and scale using technology, which is what we are doing, I think we have the right mix. And we have always been not looking for mindless growth. We have always built a sustainable business. Especially if you're in a lending business, it's always easy to give money. It's always difficult to get it back. So you are kind of always built to be a lot more cautious than any.
Yeah. On that note, Anil, let's talk separately. Yeah.
But so for us, it is about building a profitable business, a business that is sustainable and can grow quickly. So we are always trying to thread that needle. And as the investor sentiment veers towards companies which can show sustainability have the ability to grow and also have something of a differentiator and are solving an innate problem that is not solved in India, I think the capital is going to be there.
It's going to be
And
there.
I think we will be there
Sure.
receiving them.
Anil, if you want to wager which will be the top 5 unicorns, go ahead, or you could also tell me the top 5 sectors, your choice.
Yeah, I agree with the sentiment. Funding should be a consequence, valuation should be a consequence of where you're headed and not the goal in itself. I mean, the sectors for me would be obviously the sector we are in, financial services, fintech, especially if you're addressing credit and financial inclusion. Last mile logistics has become a huge, obviously medicine, telemedicine, health at a larger these three are definitely among the sectors that will drive a lot of growth. And if you want me to look at companies, obviously there are companies like Grofers, which is probably right there. Licious is doing it. Nykaa is there. But once more, it's not about valuation. It's about what
you're doing. Sure. Thanks very much. And it looks very much like all three of you are in absolutely the right sectors of the moment, sectors of the moment, so to speak. Thank you very much for your insights. It was very nice talking to all three of you.
Thank you.
Thanks, Archana. Thanks, people.
Thank you so much, Arvind, Saurabh, Anil, for your brilliant views, and thank you so much, Archana, for steering a thread to all those disparate conversation and talking points so beautifully. Lovely conversation that we had right here. So thanks all of you.